Hi there, very good morning. Welcome back to ET Now. You're watching Buy Now, Sell Now with me, Kanishka Sarkar and Srishti Sharma. This is a show where we'll take all your stock-specific queries with our experts on the technical as well as fundamental basis. But before we get started, a quick look at how the markets are shaping up. And it looks like the New Year cheer is coming to the market because the Nifty is holding up pretty well, up about 100 points in today's trading session, well above that 26,000 mark. So yes, looks like that New Year cheer is back in the market. Sensex 2 is holding up pretty well, 275 points of gains over there. Nifty Bank, on the other hand, significant gains over there as well, up about 0.5% in trade right now, 59,478. That's where Nifty Bank is at. In fact, it's the PSU banks and metals which are leading the rally as far as sectoral gains are concerned. It's only the IT pack which continues to be a laggard in trade today. However, lots of individual stock movement as well. JSW Steel, Tata Steel, all of these metal counters are holding up very well in trade today. JSW Steel and Tata Steel, they're the top Nifty gainers in trade today. Titan, Trent, Power Grid, BEL, some of the other counters that are doing very well for themselves. Other than that, like I said, IT is the top loser and TCS, that's the top Nifty loser in trade today. Bajaj Finance, Tech Mahindra, Infosys, all of these counters remain the top losers on the Nifty, contributing to the downside and limiting the upside for the benchmark. So yes, Srishti, good day of market coming in finally after that weak start that we saw.
Indeed, Kanishka, something that we are looking forward to at the end of 2025, hopefully, is that strong and Nifty sustains above that 26,000 mark and above. But with this, viewers, let's get started onto the Buy Now, Sell Now show and start taking your queries. But before that, a quick recap of how you can connect with us. So that's the number that is flashing on your screen. You can write to us, tell us your name, the stock that you are already invested in or wish to stay invested or wish to invest afresh, as well as the time horizon, and don't forget to mention your location and especially your name, and we'll try to take as many queries as possible. You can also call us on this particular number or you can write to us on this particular number, and we during the show will also get some live callers as well. So let's get started, and let me welcome two of our very special guests. We have Shahina Mukaddam joining us on the fundamental side, as well as Himen Kapadia is here with us, Technical Associate at DR Choksi, FinServ, joining us. A very good morning to both of you, and thank you so much for your time. Let's get started. A lot of these queries have already started coming in, and let me take the first one. This one is on ICICI Bank. Wherein a viewer, he actually didn't share his name. He's saying that he has ICICI Bank, 486 shares, average price is 1475 rupees. What to do with this particular counter? Loss is around 16,000 rupees. Wish to stay invested. Okay, his name is Shiva Reddy from Andhra Pradesh. He has mentioned that at the bottom. And Himen, let me come to you first, because the stock overall has been a bit of a range bound, but specifically what to do with ICICI Bank. Good morning.
A very good morning to you, Shakti. Thank you for having me on the show. It's always a pleasure. I think we've entered into a correction, medium term, possibly on the longer term charts. Our investor needs to keep in mind that if a stock goes from 250 to 1500, you need to wait for the laws of gravity to play catch up. Having said that, the bank nifty is looking strong, looking like a breakout. Downside appears limited, support at 1320. So as of now, it looks like a hold. Things could start picking up, traction could come in only on a weekly close above 1400. Hold as of now. I think a bounce is around the corner.
Okay, so that's the view coming in on ICICI Bank. But let's move on. Now we have a live caller joining us right here from Pune. It's Chandran joining us. Hi Chandran, thank you so much for joining us. Good morning, and also wishing you a very happy new year.
Good morning, madam, and wish you all a very happy new year.
Absolutely. Please tell us what's your query today.
Yeah, one is I have HFCL 5,000 shares at the rate of 78.50,
right,
which is purchased in April 25.
Right.
And Suzlon 5,000 at the rate of 65, purchased in May 25. Everything is in 25 only. And IRB 5,000 at 48 in April 25.
Okay, so we'll take a tech check as well as fundamental check. Shaina, let me come to you first. HFCL, IRB Infra and Suzlon Energy. How are the fundamentals looking like for these counters over the next, say, 2 to 3 years? Are they strong enough to hold on to?
Well, let's start with Suzlon. There, I believe the valuations are expensive, but there is a very big order book that they have, and which will drive a strong growth of 60% plus. So I would say Suzlon, you could hold with a stop loss. You can which will keep the stock, I believe, in some level of consolidation for some time. HFCL is a turnaround stock actually. So to that extent, I would believe it is better to follow technicals. It is looking strong because it's moved from losses to profits. But there again, I would say that it's better to hold it with a stop loss. And the last one was I think IFC. The
IRB.
last one was
IRB
IRB.
Infra.
Yeah,
Yeah.
IRB Infra. I would believe at current levels you can hold it because the stock has corrected one and two. They have got valuations are reasonable, strong balance sheet, and they have got good road projects in hand. There is the reach that they have actually monetized to some extent. So the balance sheet remains strong to meet all the capex needs that they require for expansion. And I would say after this correction, I would say valuations are attractive enough to continue to hold.
Valuations look attractive enough to hold IRB Infra. That's the word coming in. But Mr. Kapadia, let me come to you also. What are the charts suggesting, say, over the next 6 months period or so, what kind of returns can we expect from HFCL, IRB Infra and Suzlon Energy?
A very good morning to you, Kanishka. I think HFCL, like Shaina mentioned, fundamentally, even technically, it's on a turnaround. The good news is it's out of FNO. So that speculative overhang is out. So now the stock should behave more normally. Having said that, I believe block deals have happened. Management is sold. Uh, Stronger hands seem to have bought. Volume is highest in the last 15 months, almost 35 crores shares traded. This isn't delivery marking, but gross volume, which is massive. So if stronger hands are bought, which looks like stop loss of 60, I believe things should start looking better. About okay, we're about 68, 50, 72, 79, 86, 92. Things are looking better. Technically, also in a turnaround. I'd say hold. I think things are on the mend. Suzlon Energy, it's been a multi-bagger. What from $7 to 85? Uh, Expect a 2 year correction if a stock goes up 10 times. You wait for valuation to catch up either way. So it's corrective. It's going to take some time to play out. Support at 52. If that breaks, comes through 46. The bigger picture, if I take a longer term view of 2 years or more, is bullish. But before that, I don't think, I mean, it's not going to do anything spectacular. IRB oversold, downside limited, supported 41, doesn't look like breaking. It's corrective, same story. Went from 10 to 75, has been corrective for 1.5 years, could continue for 6 months more. So all of them look slightly similar. Oversold, support level, bigger picture looks good, but currently nothing.
All right, so that's today coming in on IRB Infra. Let's watch out for that and the rest of the counters. But with this, let me move on and get to the next query. And this one is coming in on Lakshmi Organics, wherein Suresh from Bangalore has bought 1,000 shares, buy prices 270 rupees. And Shaina, has been 2 years that he's been holding this counter. What to do with this particular stock at this price point? He's at a loss.
Well, it's a small cap. So I would say, they have got the capacity expansion which has come on, which has come on recently, and that should drive growth. But at the same time, I would not remain a long-term investor in Lakshmi Organics. Currently, I would say it's a hold, but I would look for a bounce to exit because some of the products that they are going to launch do not have too much of export potential. Domestic also in the long term could be an issue. So I would say hold it for now because it's a small cap and the growth will come in through expansion. But I would say look for a bounce to switch to some other specialty chemical company.
Okay, so that's the view on specialty chemical space. But moving on, let's have another query answer. This is Rakesh, who's writing to us from Hyderabad. Mr. Kapadia, he's holding Castrol India, 1,300 shares at a price of 205 rupees. So obviously he's sitting with some bit of loss right now. He's looking at a short-term horizon. He's asking whether he should continue to hold. Could there be some upside in the coming months or so, or should he book his losses and sell the counter at this juncture? In the past 6 months or so, we have already seen a decline of over 14%. Is this trend only likely to continue, or could we see a turnaround story in 2026 for Castrol India?
Kanishka, I have some good news for him in the new year. I believe a short-term bottom has been made. I believe an intermediate bottom is in the offing, is being formed. So firstly, the level to respect is 181. That needs to hold. Extreme short-term 188. So things are on the mend. It's on the verge of overcoming the 55-day exponential moving average. I believe one can expect 210 and 220 in the next 6 months. Anything shorter than that, difficult to say. But if it's a very shorter term call, maybe like 1 or 2 weeks, hold with a stop loss of 188 for a very strict stop loss, or 181 for a slightly positional stop loss. A recovery seems like a distinct possibility.
All right, that's the take coming in on Castrol India. But with this, viewers, it's time now to slip into a very short break. Don't go anywhere. We'll be right back.
Hi there, welcome back to VT Now. You're watching Buy Now, Sell Now with me, Kanishka Sarkar and Shakti Sharma. This is a show where we'll take all your stock-specific queries. But before we get back to all the queries, well, it's an end of an era in the global investing world today. Warren Buffett, the Oracle of Omaha, retires as the CEO of Berkshire Hathaway at 95, closing a 6-decade run that reshaped value investing. Greg Abel takes charge as Berkshire sits on record cash and shifting priorities. From Coca-Cola to Apple, Buffett beat market across cycles, even though recent years show underperformance. Snehi is here to get us a glimpse of his journey.
Well, yes, today we bid goodbye to the Oracle of Omaha from the post of CEO at Berkshire Hathaway. 6 decades in the making, and what an investment journey he's had. It's not only us, but global markets across the world have looked forward to his investment strategy. Let's break down what his journey has been. Let's talk about 1956, and slightly before that, he bought his first share when he was 11 years old. In 1956, Buffett founded the Buffett Partnership Limited at age just 26 years old. 1964, he went to he bought stake in American Express as well. So these are some of the major investments that he has made. Yes, talking about the most recent one, Apple is his biggest shareholding, and he's going to be passing the baton to Greg Abel, who's going to be taking charge from Warren Buffett. But once again, shifting focus and talking about his investment journey, after American Express in 1964 came the stake in Walt Disney in 1965. So that is something to talk about. And yes, these are only make up for the legendary journey that we've seen over the last 6 decades. After Walt Disney in 1965, he acquired Berkshire Hathaway and transformed it as a holding company. In 1970, he became the chairman and majority shareholder. 1978 is when a partnership that history remembers really fondly, Charlie Munger joined as vice chairman. So that is also something to watch out for. 1970s and 1980s, over these decades, he invested in See's Candies, Geco Insurance. In the 1980s and 90s, he invested in Coca-Cola, McDonald's, Wells Fargo, and Dairy Queen. In 1996, he took full control of Geco. In 2010, he started investing in railroads like Burlington Northern. Then came that investment in Heinz that he regrets to date, and IBM. 2016 is when, for the first time, he started buying shares of Apple, gradually increasing his stake, although he has started to pare some stake off late, but it still continues to remain his top holding. Let's talk about how Buffett has performed compared to the Wall Street Index S&P 500. Over the course of 1965 to 2024, Berkshire Hathaway has given absolute returns of 55,000 times. That's an insane return to talk about on a portfolio. While the CAGR growth has been 20%, for S&P 500, the return has been 390 times in that same period with a CAGR growth of 10%. So in fact, he has outperformed the S&P's CAGR over the last many years by almost double. Let's talk about the major moves. Over the past 20 years, Berkshire Hathaway has outperformed the S&P 500 by 300%. Over the last 10 years, the outperformance has happened to the tune of 41%. However, in the last 3 years, Berkshire has underperformed the S&P 500, and over the last 12 months also, Berkshire has underperformed the S&P 500's returns by 6%. On a year-to-date basis for 2025, Berkshire Hathaway has given returns of 10.5%, S&P 500 at 18.7%. So yes, in recent times, due to all the tariffs and uncertainties and some bets made wrong, Berkshire stock has seen a little bit of a beating. But let's talk about Berkshire's cash mountain that currently sits at a mammoth amount of 381 billion US dollars, the highest it's ever been. This, of course, on the back of the back-to-back stake sale that they have done in Apple. So that is something important to watch out for. But yes, this stake has cash pile has only been growing consistently since 2023. Now let's talk about the main investment crux or the thesis that Warren Buffett lived by and some of his major quotes. He said, rule number 1, never lose money. Rule number 2, never forget rule number 1. So that is a very interesting quote coming from him. If you talk about the key takeaways from his last and the most recent shareholders' letters, he did say, decide what you would like your obituary to say and then live the life to deserve it. He credited his success to luck, timing and birthplace. He remembered partners Munger and the other Omaha business partners too. He defined greatness as kindness, not wealth alone. Urged learning from mistakes, choosing heroes wisely. Also increased lifetime charitable giving to Children's Foundation. So that is something that's another key highlight to watch out for. And he reinformed long-term investing, patience and understanding business principles. Lastly, let's talk about some of his biggest investing mistakes that he has publicly acknowledged. The first one is buying Berkshire Hathaway itself. Ironically, he calls it the dumbest stock that he has ever bought in 1962. Then comes Dexter Shoe Company, often cited as his worst financial disaster. And he's also quoted saying that as a financial disaster, this investment should have a separate place in the Guinness Book of World Records. Then he also said that he missed the Amazon and Google rally. It was an error of omission on his end. And lastly, he also did say in 2019 that overpaying for the Kraft Heinz investment when the demerger happened in 2015 was another big mistake. So that's a wrap on the legendary investing journey that we've seen for Warren Buffett, who steps down after a 6-decade career at Berkshire Hathaway.
Indeed, thank you so much, Snehi, for giving us a lowdown of his almost 60 years of investing, and definitely Warren Buffett is an inspiration for us and many of our investor community as well. But with this, viewers, let's get back to all your stock-related queries. Then so many queries are trickling in. We have Shahina as well as Hemeen with us to guide you better. And the next query that I have, Hemeen, let me come to you for this one, wherein a viewer has a query on KEC International. Bhagwan from Mumbai has been writing to us, holding 100 shares at a price of 788 rupees. He can still wait for the next 6 months, but what targets should he be looking at?
As of now, what could pan out looks more like a recovery, not a rally. So firstly, he can hold for the next 6 months. In terms of targets, we are currently at 734.65. I believe something around 800 could be a plausible target from a 6-month point of view.
That's the 6-month view on KEC International. Let's move on and have another query answer. This is Raja writing from Delhi. Shahina, he wants to enter into Adani Ports from a long-term perspective. One, how long should he hold on to? Do you think current levels are good to enter? What is your view? Just the other day we were talking to one of the experts and they told us how this space, India's coastal line, still has a lot of potential that is yet to be unlocked. So do you think Adani Ports is one of those counters where one should invest over the long term and we could see this potential value unlocking over here?
Yeah, I believe while there has been a bit of short-term correction, in the longer term, I would believe that Adani Ports is going to, be one strong stock to hold because of they have got a huge growth tied up in number of ports that they have actually acquired over the last couple of years, and also in terms of volumes, they actually are the market leaders. They account for most of the volumes in the India context. And I would believe there is only one competitor that they have, which is much, much smaller. So I would say Adani Ports is a good hold. And you can start buying, in my view, a little bit of dips, somewhere close to 1,400 which is not much lower from current levels. You could keep adding in small quantities and hold for the longer term.
Capacity coming in on Adani Ports. Let's watch out for that. But with this, viewers, we have a live caller with us, and we have Mr. Vinod Kumar on the phone line. Hi, Mr. Kumar. Good morning, and good to be speaking with you. Please go on and ask your query.
Good morning, ma'am. You see, I have a BLS International quantity 400. I bought at the price of 188. This is about it's about 9 to 10 months old stock. So view for next 3 to 6 months, because it has fallen quite a bit now.
Yeah.
Does it stand a chance to go up to about 400 plus, so that one can,
Benefit out of it. Yes, of course. Why not? And Hemane, what's your thinking on BLS International? Though he's sitting at a profit, he bought it at 188 rupees, holding 400 quantities. But where do you see the stock headed in the next 3 to 6 months? Because I believe that in the past couple of months, the stock has did nothing. It's been consolidating in a range.
Absolutely, Shashri. So from my point of view, it would be a sell-on bounce in his time frame. A longer-term time frame would need a hold, but his time frame, it's a sell-on bounce. Like you said, it's done nothing. Doesn't look like doing anything. Having said that, the pros are 280 support, close about 340, should give a bounce. So it doesn't look like doing anything great, but it's fallen significantly. Oversold support levels would mean a bounce. So sell-on bounce.
So a sell-on bounce call for BLS International. That's the view coming in from Hemane. But another query on Ircon. The viewer hasn't mentioned their name. So requesting all of our viewers to please attribute the query to you so that we can mention that you have been writing to us. But we'll take this one. Ircon, the viewer bought it at a price of 162 rupees about a year back. I mean, he's sitting with some bit of profit right now. But if we look at the past year's trend, the stock itself has declined nearly 18%. But from here on, do you expect some kind of upside that we could see in the counter? Because the viewer is asking, should they hold on to it? And if so, how long should they be holding on to it? Or should they just book some bit of profit that they have right now and exit?
No, I believe it quantifies as a whole, Kanishka. Many of these railway defense stocks ran up very sharply, and they've seen a significant, technically a deeper correction. As of now, a turnaround is on the anvil. I believe a close above 185 on the weekly chart would mean an upside probably till 210. So as of now, it's a hold. A bounce is coming. And if you have an outlook for more than 2 years, then it looks good. But before that, bounce coming. Wait as of now. I believe higher levels are on the anvil.
All right, that's the take on Ircon International. But Shahina, the next query that I have is coming in on VST Tillers, wherein Raghava from Hyderabad has been holding VST Tillers 200 shares, average price is 390 rupees. He's prepared to hold it for the next 2 years. What's your take on this particular counter, and should he average at current market price? That's his query. Okay, Shahina, I want to make a correction. It's VST Industries because actually his buy price is 390 rupees and VST Industries rather is trading at 258 rupees. Any take here?
Yeah, it's a small cap with market cap just about it's just a little bit more than 4,000 crores, 4,500 crores. I would say VST. I would both. If you are talking of VST Tillers as well as VST Industries, I would say you can average and hold for the medium to longer term because while VST Industries is in cigarettes, I would believe the valuations are quite attractive. It throws up a lot of cash. And in terms of VST tillers also, I think with good monsoons, the demand is likely to be pretty robust. So both of them, I would believe you can average at current levels and hold for the medium to longer term.
All right, so both can be averaged at current level, VST Tillers as well as VST Industries. That's the word coming from Shahina. But time now for a very quick break. We'll be right back to answer more of your queries. Hi there, welcome back to Easy Now. You're watching Buy Now, Sell Now with me, Kanishka Sarkar and Srishti Sharma. And we are taking all your stock-specific queries with our experts. We have Shahina and Hemin with us to answer all of your queries. So let's get back then. Now, this one is coming from Lakshmanan. He's a senior citizen writing to us from Bangalore. Shahina, let me take this query first with you and then I'll come to Hemin also. Any guidance 2026 in the banking space and NBFC space as well? What are your thoughts? Any picks that you have for the year that starts tomorrow? Your preferred banking picks?
Well, banking picks, I would still stick with the large cap stocks. And my favorites, of course, would be ICICI Bank, which actually has corrected. And as Heman has said in the beginning of this show, that it is in a corrective phase. So I would say you can look at corrections to add it to your long-term portfolio. Then in the smaller banks, I would like something like a Federal Bank, which I believe has good potential for growth. You can also look at Yes Bank at after a couple of months and hold it for the longer term. In PSUs, of course, SBI remains the top pick, but you could also look at some of the one or two other banks like Canara and BOB, where I believe the valuations are quite attractive. So overall, I would say banking does look quite good for the coming year. In NBFCs, I would say at dips, you could look at something like Sundaram. There, I believe a lot of changes are happening, and it would drive growth over the next 1 to 2 years. So that you could look at any corrections that you get to add to your long-term portfolio.
So that's the fundamental view. Some of those picks in the long-term basket as far as the banking and NBFC space is concerned. But Hemin, let me come to you. Say from a 3 months perspective, which are some of the stocks in the banking and NBFC space that you spot, have a good return potential? So you'll have to unmute yourself.
Oh, sorry, my bad.
No worries.
Firstly, I like Kotak Bank, Kanishka. It's not done much. I believe upside and a breakout is on the way. So Kotak Bank. And in the PSU space, I think you can pick any of the other banks, maybe even a PNB, or like China said, CanBank and Bank of Baroda are the better ones. But some of these, like a PNB or maybe even a Union, UCO, they could give you better percentage-wise return because they are all looking good. So that would be in terms of banks. NBFCs, I don't know, something maybe like a Bajaj Finance that looks interesting. Shriram looks good, but has had a brilliant run up, so nothing of that sort. But I believe some of these banks would outperform and do quite well. The bank Nifty itself is shaping up for a breakout, actually. Kanishka.
All right, breakout maybe on the Bank Nifty and select financials that you can keep on your radar coming 2026. Both of our experts have given their take. But let's move on and shift focus to Dixon Tech because all throughout this year, the stock has been hammered like anything. And Hemin, let me come to you because the stock has definitely almost halved, I would say, from those higher levels. And every other day, we get to see a query wherein Chandrasekhar now feels himself that he's stuck 35 shares at an average price of 15,220 rupees. What to do with this one? He can still hold it for the next 1 year, but will that be worth?
Well, honestly speaking, it's a Hobson's choice. I believe important levels have been broken. The next support level, which looks like working, is 10,620. So further pain is on the anvil. If we can extend his time horizon a bit, then I would be more comfortable. Otherwise, till then it's a sell on bounce. Please keep in mind the stock has gone from 2,500 to 19,000 plus. It is, like I said earlier, laws of gravity need to be respected. The bigger picture might look good, but otherwise this is going to take time to play out. So hold if it's a very long-term view, otherwise sell on bounce.
Sell on bounce call, but you could consider holding if it's a very long-term view as far as Dixon Tech is concerned. But Hemin, another query coming your way. This is on the defense pack yet again. The viewer says, one, they're a long-term investor and a huge fan of ET now. So thank you so much for that. It really keeps us going. He's Venkat Rao writing from Vishakhapatnam. He has HAL shares. His buying price is quite high, 4,981. That's where he bought it. He wants to know, should he average at the current levels or should he wait for some more correction? What would you suggest? What are the levels to look at when it comes to HAL in the short term?
Oh, okay. I'll give the level for the short term, but I'm not sure something like this quantifies as a short-term investment or a trade. Having said that, the level to watch out from a slightly shorter-term point of view is 4,200. On the upside, for anything significant to happen, is 4,480. The way I see it, if it's a 2-year hold, then it's a hold. Do not expect the stock price to move like the plane if they make fast plane. Give it some time. It's humongous multi-bagger. So frankly speaking, looks great, but give it time to recoup.
We'll give it time to reboot. But what about averaging levels? Should he average right now?
Okay, I would say it doesn't look very hunky-dory as of now. It's corrective. It's technically it's a sell on medium to long-term charts. So I suggest spread your purchases rather than trying to go the whole hog at one attempt. Like I said, the first level is 4,200. Then you have 3,900 and finally 3,500. I do not mean to say all these levels are coming, but keep in mind it's corrective. It might surprise on the downside, so it's better to spread your purchases or maybe even do an SIP every month. But these levels need to be kept in mind. I believe below 4,200 weakness should start making itself more apparent.
So that's the take coming in on HAL. The next query that I have, Shahina, is coming in on Eternal. And Jinsen has been holding 300 shares at a price of 273 rupees. What to do with this one? Is that a hold or exit? He can still hold for the next 1 year.
I would say you continue to hold. While, of course, valuations are slightly on the higher side, but I believe it's the market leader. And I would say that Blinkit continues to do pretty well for it and should, enable it to hold its profitability into, Blinkit should hold profitability into the coming year. I would say that you continue to hold it for the long term.
Okay, so continue to hold Eternal for the long term. That's the view coming from Shahina. But time now for a very quick break. We'll be right back to answer more of your queries on the other side. Hi there, welcome back to ET Now. You're watching Buy Now, Sell Now with me, Kanushka Sarkar and Srishti Sharma, and we're taking all your stock-specific queries with our experts on the show today, Shahina and Heyman. They're right live with us. So let's get back to the queries then. Now this one is Madhukar writing from Hyderabad. Now they've been holding Hindustan Copper at a price of 270, Shahina. They're looking at a time horizon of 1 to 2 years. They want to hold it for that long, and really there's no stopping the copper prices. Also, the kind of rally that we have seen in metal prices is significant this year. Do you expect that trend to continue in 2026 as well? And how do you see that impacting Hindustan Copper? Will it continue to be a good hold from a 1 to 2 years perspective?
Yeah, so Hindustan Copper is one stock which I have been recommending in the last couple of maybe from the last 2-3 months. And this is on back of very strong price of copper. Also, I should mention, I personally hold some of the stocks that we have discussed in this show, including Hindustan Copper. So I would believe that copper prices are likely to remain at higher levels, and Hindustan Copper is going to benefit because the revenues that they earn are based on the LME pricing. While they decide the volumes in advance, and whoever's to be their buyer puts in their bids for their quantity, but the price are linked to LME. So any up move in LME prices directly adds to their bottom line. Also, in terms of capacity expansion, mining, they are actually expanding in a big way over the next 2 to 3 years. And as you know, currently they have about 40% of India's reserves. It is one of the only or main company in copper as of now domestically. So also the government is actually pushing mining in a big way. All these things are a positive for Hindustan Copper. But of course, the rally has been quite sharp in the last, I would say, a couple of weeks. Has gone up almost about 30%, 35%. So to that extent, it is you can add. I would say you can continue to add, but look at levels where maybe slight dips that where you can continue to add to your long-term portfolio. I would suggest buy it and then hold it for the next 3 years.
All right, that's the take coming in on Hindustan Copper. But Hemain, let me come to you for the next query, and Shahina, I'll also come to you after that. But firstly, Hemain, Sanjay from Bangalore needs entry levels to take long positions in Shakti pumps as well as Coforge. So the first question is whether he should go ahead and make those purchases, and if yes, then what should be the entry levels?
Okay, we'll start with Shakti pumps, Srishti. Shakti pumps deep correction, so that is good. 1375 to 550, that's a significant become almost one third. Now things are beginning to stabilize. Yeah. So one can look to buy it around 690 and maybe slightly below that. Shakti pumps are close above 800, should take it somewhere close to four figures. So yes, Shakti pumps quantifies as a buy on slight declines. Coforge, I am not that happy. It technically it's not a triple top exactly, but thrice it has turned from the 2000 level. It says obviously adjusted for split or whatever. So thrice it has turned from the proximity of 2000 level and has done nothing. We are in the danger of slipping into a correction of a greater degree. So I won't have a target or a buy for Coforge because I don't think it quantifies as a technical buy in the first place.
All right, not a buy coming in for Coforge, but Shahina, what is your take on both of these counters? Shakti Pump of late have been getting a lot of orders, while for Coforge on the back of that acquisition that they have made and the deal, the stock is indeed under pressure.
This is another one stock I've been recommending in the small cap space for some time. I also personally hold it for quite some time. And there, I believe the order book position is strong and it is likely to drive a growth of, the first half was not good. If you saw the first half, it was pretty flat. But the management continues to say that they would grow by about 20% odd in terms of revenues. So that basically means that the second half is going to be pretty strong, and that is backed by the orders that they have been getting in the last couple of months, last couple of weeks, I would say. So I would be a buyer in Shakti pumps. Maybe a target of something like fundamentally 830, 835 would be something I would look at the first level before I take a decision whether to hold or continue to add. In terms of Coforge, see, I think the long term the acquisition is very good. The management is saying it will be EPS accretive by FY27. At current levels, I think it is a bit expensive. So I would you can look to buy, but not now. Maybe a couple of quarters down the line. Let us see how they integrate the acquisition that they have recently made or they are going to make, and then look to add Coforge. Because if you compare it to some of the other large cap, which is say in Infosys, there I believe the valuations are much more attractive for Infosys. So yes, for now maybe one of the other large cap stocks in IT would be preferred, but Coforge maybe a couple of months down the line would be an interesting bet to add to your portfolio because they are talking of a $2.5 billion type of revenue in the longer term, maybe 2 years down the line, once the acquisition is integrated into the company. So, and it's a complete equity swap. So, to that extent, I would wait and see how the balance sheet turns up. But yes, it could be an interesting bet to keep on your watch list.
Coforge looks like an interesting bet to keep on your watch list from the mid-cap IT space. That's the word coming in. But let's move on and now shift focus to the power sector, the renewable energy sector. More specifically, Prabjot has written to us from Gurugram. Now they have 1,200 shares of NTPC Green. They bought it at an IPO price. They bought it at 125. Now the current price is close to 96 rupees or so. Shahina, he wants to know, are the long-term prospects good enough for a fairly large period of time? He's looking at a 5-year time horizon. So do you think he should continue to hold it for 5 years, or should he look at some of the other plays in the renewable space?
See, NTPC Green, most of the growth will come only in FY27, FY28. They have raised funds and they are actually going to put up a lot of capacity, which will actually come on stream 1 year, 2 years down the line. So at that point in time, it may start looking a bit more attractive. at current levels, it continues to look expensive. So if I was to be in NTPC, I would rather be in either NTPC rather than NTPC Green. But better than all these, I would rather be in Reliance, because you have the not only benefit of the renewable energy that will come on stream, start coming on stream and contributing in a big way to the O2C business starting FY27, but also you have got the demerger that you are likely to see in Geo in 2026. So I would believe that it would be better to switch to Reliance Industries, or then if you want to be in NTPC, then NTPC the parent.
That's the take coming in on NTPC Green, and indeed after a long while Reliance Industries is showing interesting moves. Let's watch out for that. But Hemant, the next query that I have is coming in from RK Suhuja, and out of HEG as well as UPL and Shakti pumps we discussed earlier, he wants one suggestion where he can go and make one investment and for a long term, and he also wants an entry price as well.
HEG, UPL and Shakti pumps. Frankly speaking, UPL is breaking out after ages. HEG has posted a fresh 5-year high, if not a 4-year high, and Shakti pumps is on the anvil, on the mend. So, I mean, frankly speaking, all look good, but I will take it safe because Shakti pumps is significantly below its peak. So technically, I think that makes it cheaper. So one can buy Shakti pump at 690, between 690, 670. Target would be 1050.
Okay, so that's the word coming in on Shakti pumps. Thank you, Hemant and Shaina, for joining us today. That was the last query of the day. And once again, thank you for answering all of them, and wishing you all a very, very happy new year. Thank you so much for joining.
And Happy New Year to all of you, everybody at ET Now, your viewers, and my dear friend Hemant.
Absolutely. All right, then let's